Good day. Welcome to the PSG World Offshore Solutions Performance Overview for May 2023. Global equities were mostly down for the month as the prospect of a US government default and disappointing economic data out of China weighed on market sentiment. The MSCI ACWI ended the month minus 1.07% lower, and the MSCI World ended minus 1% lower. Emerging markets were down by minus 1.68%, as Chinese stocks weighed on performance. Despite the volatility, the S&P 500 managed to return 43 basis points for the month, which was driven by the megatech counters. The FANG index was up by 17% month on month. Asian markets were mixed for the month as Japanese stocks rallied by 7.04%, while Hong Kong equities were down by minus 7.85%. UK equities were down by minus 4.93%, and property continues to plummet as the S&P Global Property Index was 4.5% lower. In fixed income markets, the World Government Bond Index was down by minus 2.17%, while investment-grade bonds were also down by minus 2%. Emerging market bonds were down by 50 basis points, and global cash was up by 43 basis points. Over the month, growth continued to outperform value, with the main driver coming from large cap growth counters. Growth has outperformed value year to date, and value has struggled to keep up. The largest underperformance year to date comes from smaller cap value counters, which are down minus 3.64%. Looking at highlights for the month, the top performing managers were Schroeder and Bailey Gifford, while 91 and Fidelity had a tough month. 8 funds were included in our quantitative radar, which included 3 funds from 91. None of our funds were included on our qualitative radar. The Global Preserver Fund of Fund USD underperformed the sector by 70 basis points, and none of the underlying managers outperformed the sector in May. On the other hand, the GBP class outperformed the sector over the month by 70 basis points, with all five funds outperforming the sector. The ranking table is still dominated by first and second quartile performance over the long term, and both classes are in the first quartile on their recommended investment period. The Global Moderate Fund of Fund underperformed its sector by 65 basis points in May, as only 2 out of 6 underlying managers outperformed the sector. The fund has managed to produce second quartile performance over its 5-year recommended investment period. The Global Flexible Fund of Fund USD class underperformed the sector by 70 basis points, with 4 out of the 7 managers outperforming the sector. The Global Flexible Fund of Fund GBP class outperformed the sector, with 3 out of the 7 managers outperforming. The ranking table is still dominated by first and second quartile performance over the long term. The Global Creator Fund of Fund outperformed the sector by 2 basis points, with 5 out of the 10 managers outperforming in May. As we can see here, the solutions have continued to produce consistent first and second quartile performance over the long term, and have performed relatively well over their respective recommended investment periods. Looking at our 3-pillar approach, even with the volatility this year, the team is still achieving their objective of delivering consistent, above-average performance at below-average risk while maintaining a competitive price. Thank you.